What is going on, investors? Welcome to my channel. This is Jason, aka the Frugal Investor. This video is going to be a portfolio update video. Plus, we are going to talk about the stock market crash news that were coming out during the beginning of this month and during the end of the last month that were predicting that the stock market crash is so imminent and that we are doomed and all. We are going to talk about that, how to insulate yourself from that, how to insulate your portfolio from that, and we are also going to give you a quick update on the portfolio. Please don't forget to like and subscribe. With that said, let's get right into it. So to give you a quick update on the portfolio, so far within the past 1 year and 1 month, the portfolio is up by almost 20%, 19.56 to be more precise. The gains are good, but they are not spectacular because there have been some holdings that have been performing not really well. For example, Alibaba and Kimball Electronics. In Kimball Electronics, I'm down by almost 32%, and in Alibaba, I'm down by almost 29%. So the reason Alibaba is down is because of short-term negative sentiment around China, and the reason I'm down in Kimball Electronics is because of COVID-19, direct result of this pandemic. Because during the pandemic, the demand was so high, they had to ramp up their supplies, and the orders were going out through the roof. The number of orders this company was receiving was going out through the roof. So they had a very high earnings number that they earned during this past quarter, in the quarter of during the pandemic, because the demand was so high and they were ramping up their supplies. They were ramp up to a certain level. They were successful in ramping up to a certain level, but after that the ramping up became harder and harder. So they were able to fulfill a lot of the orders, but they have a lot of backup orders that they haven't fulfilled yet. So they are going to fulfill the backlog hopefully this year and hopefully next year, and it'll take them 2 years to get the earnings stabilized at a level where it's like, it's growing at a smooth pace of 7%, 8% per year, which is this industry is expected to grow. The total addressable market for Kimball Electronics is huge. It is a very small market cap company. The market cap is only 529 million. So there is a huge room to grow because they are spread out in countries like Mexico, like China, like Malaysia, like Indonesia, India, and United States. So these are the countries that they're spread out in. So they have a huge market space to capture. So in the short term, yes, it's red. In the short term, yes, it's down. But when this thing stabilizes, when the orders and the backups from pandemic, they're able to handle it. And this week, this quarter, they missed their earnings because the last quarter the earnings were so high because of so much order was given to them. And they are the company that supply parts to electric car companies. There's a company supply parts to boats, to airplanes, and all these kind of things. So it's a very in demand company. And if the electric cars and all this stuff increases in the future, these are the type of companies that are going to benefit a lot from it. So for example, when people were going to California to collect gold, they were saying that the people who became actually rich were the people who sold them shovels and bags. So this is the kind of mindset that I'm applying here with Kimball Electronics. This is a company that sells parts to electronic car companies in multiple markets around the world. And right now it's in a downturn, but I will give it 2 to 3 years to stabilize everything, to get in a strong position, to build strong base. They're trying to build up a big warehouse in Mexico right now. So I'm going to give it a good 2 3 years to stabilize and to start making stable earnings and start growing at a stable rate in all these markets that I named. And the total addressable market in the United States is expected to grow by 6 to 7%, and in the world it's even more than that. In the developing countries, in countries like China and India, it's even harder. It's even higher. So very bullish on this in the long term. We'll see how this plays out. This is a small cap company. I'm expecting it to be a five bagger, six bagger in the long term, but we will see how things play out. I can't predict the future, but that's just my hope. Now, the second thing is Alibaba. Alibaba is down because of this negative sentiment around China. We've recorded a lot of videos on it. And negative sentiment around China, which I think is somewhat temporary. Business is good, basics are good. So, let's give it 2 3 years, see how it plays out. I think things will stable out in the long term. And so that those are the things that are not performing really well right now. Banks are also down by a little bit. Capital One is down by 11%. JP Morgan is down by 7%. Insperity, which is a HR company, is down by 9%. And banks are also down, but that's okay because these are all short-term fears. It could be many reasons. December sell-off. It could be many reasons, and that's why in these times I'm buying more. I bought more of Kimber Electronics. I'm going to buy more. I bought more of Capital One actually last week. I will buy more of these companies which are in the red right now. Insperity I'm not buying more because it's trading at a very high P by E ratio right now. It's trading at a P by E of 36 in the total addressable market, and the growth in the market in this space in the future is not expected to be that high. They pay a dividend. They are expected to grow very fast. And the P by E ratio is high, but the growth in this sector is not expected to be super high in the future. Also, it's a very competitive space. The barrier to entry is very low. So, in Spirit, it has a moat because it has a really good CEO, very solid base of customers, but it's not something that cannot be taken away in a way. It's the leader in its space. So, very competitive space. That's why I hold its competitor, which is a Trinet Group. So I hold both the companies. So with that, I own major parts of the industry. This is like 30 to 40% of the industry here in the United States. So with just these two players, so that's why I hold them. And it's a long-term play. We'll see how things play out. Industry is supposed to grow in the future as the labor needs increase and things grow. But we'll see how things play out over the long term. This is all of these are long-term plays. I also added PayPal, as most of you guys know who have been watching my channel. PayPal, I paid a P by E of over 40. Now, I paid a premium for PayPal. The reason I paid a premium for PayPal is because in the long term, it's going to be a winner. They have so many heads under the bucket that each head can become bigger than PayPal in the future. So I'm really bullish on it. You can watch my video, PayPal stock analysis video, why I bought it. Future P by E is less than like 20, less than 15 if you count 5 years, 7 years out. So that is also a great thing. Again, a long-term play. Nobody knows the future, but it has a huge moat around it with its 300 million customers, one of the biggest players in the space, leaders in the space, and that's what makes me so bullish. Now with their crypto thing going on, it makes me really, really bullish on PayPal. That is the thing with PayPal, with the Insperity, Trinet Group, JP Morgan Chase. Again, it's like a savings account. Capital One Financial, again, very fastly growing bank. Alibaba, Kimber Electronics, USANA is like they sell vitamin products. They also have a new plant coming up in Massachusetts. I think they are going to start building up protein bars, and there are vitamin products that are selling in South Korea and Asian markets. They are a huge market over there. They have a network marketing thing going on over there as well. So it's a great company. Company has no debt whatsoever. Really good management. They are a little bit spread out. They are selling so many things in so many different places. That is one negative point. But other than that, small company. It's a $2 billion market cap. It has grown really fast. P by E ratio is only 14. Future P by E is less than 6. The earnings are growing year over year. So really good growth expected in the future, and I'm really bullish on it in the long term because those markets they're growing really fast. Followed by Aero Financial, small bank in in southern New York, I think, in the Greenwich and all those areas. A small bank, um, growing really fast. Actually, 556 million is the market cap, available at a P by E of less than 10, future P by E of less than 5. It pays out a very nice dividend. This is the one of the only banks. Okay, listen to me close. This is one of the only banks that did not cut their dividend during the 2008 financial crisis. There were very few banks who did not cut their dividends during the 2008 financial crisis, and this is one of those banks. That should just give you an idea of how strong this small bank is. It's like a bulletproof small bank. It's like a very, very strong position, a lot of cash on hand. The book value, tangible book value, which is the liquid value of this, is very, very close to where the stock price is, almost 70 to 80% of what the stock price is. That's what also makes me very, very bullish on it. Plus they pay a really nice dividend. Small bank expected to grow really fast, and that is why I'm so bullish on it. Again, a long-term play. Equinix data center, one of the biggest data center player, the leader in space, spread out in many, many countries. Really great future for data centers. Medifast, again, a network marketing company, almost 54,000 coaches spread around the country that are selling their products. They are now entering in Singapore and Asian markets. Also very bullish on that. Network marketing company, that's why it doesn't get a lot of love. Paid a P by E of 14 and a future P by E of less than 7. Dividend yield is 2.67%, growing really, really fast. If you look at the earnings of this company, which I made an analysis of this video, very fast. Go and check out my next 10x stock. You can check out that video. Really fastly growing company and pays out a really nice dividend as well. Facebook, again, coming out with Metaverse. what can I say? I'm very bullish on Facebook in the long term, and I'm going to keep buying this company. Google, same thing, really bullish in the long term. Okay, what can I say? Costco, okay, Costco just came out with their earnings and they killed their earnings. They did really well. Fabulously managed company. Again, I paid a premium for it. Paid a P by E of 45 or 44 for this, and a long-term P by E of over the next 10 years a P by E of less than 20. So paid a premium for it. But what am I paying a premium for? I'm paying a premium for Costco, which is one of the most essential businesses in our country. No matter what happens, we'll always need Costco. There is always going to be a line in Costco. It is time tested. It has been here for a while. Biggest leader in space. Huge moat around it with this membership model. Okay, people just love Costco. So that's why I'm very bullish on Costco. I paid a premium for it, but I'm also paying a premium for Costco. If it goes down, I'll buy more. But the earnings, they will cover it up in 4 or 5 years. The way they are growing right now. So again, very bullish on Costco in the long term. I'll keep buying more, no matter what the premium is. It's a great business. Lowe's again, a great company, but they have a lot of debt. They have a lot of debt on their balance sheet. Available at a P/E of 21, a forward P/E of less than 15, pays out a dividend as well, but they have a lot of debt on their balance sheet, which they need to start getting rid of. Okay, they need to start getting rid of their debt, and so that's why it's there. The home building sector and all these sectors, they're supposed to grow in the future, and you can see the growth coming in the future. The interest rates are going to stay low. They can't really raise the interest rates, so expected to see a huge growth in this sector as well, a stable growth in the future. I don't own Home Depot because I used to own Home Depot. It doesn't matter. It's almost the same thing. They're both Lowe's is growing a little bit faster than Home Depot. That's why I hold it in my portfolio. Okay, followed by Apple. Okay, Apple, what can I say? I think the stock is overpriced. I think this stock is underpriced. Excuse me. I think this stock is underpriced. I think the market cap, which is 2.9 trillion, it's only for their electronics business. I don't think they're even valuing all the other things that are going on with Apple, all the other things that are building and they're coming up with. So I think it's a very undervalued stock. P by E of 15. Can you believe that? Apple had a P by E of 15. Can you believe that? P by E of 15, future P by E of less than 5 and less than 4. So I think, and they pay out a dividend which increases consecutively year over year. So I think this company is undervalued. I think 2.9 trillion is the price for just one segment of Apple. They are not counting all the segments, and that's why, I'm bullish on it. So these are the companies that I hold in my portfolio. Apple, Costco, Apple, leader in space, a huge moat around it. Costco, leader in space, a huge moat around it. Lowe's, fastly growing, moat around it. Two biggest players, Lowe's and Home Depot. This is the second one. It's growing faster than Home Depot. Google, a huge moat around it. Facebook, a huge moat around it. Medifast, a moat around it with 54,000 coaches that sell their products, that have seen the personal gain on themselves from their products, and now they're publishing it to the world. So that's the huge moat around it. Equinix, one of the biggest data center players. Aero Financial, small bulletproof bank with a lot of tangible book value. That's a huge moat that it has. USANA, no debt, very well managed company, very well diversified, very well spread out, very good managed. Huge moat around it with that kind of thing. Huge moat around it with its protein pills, sorry, vitamin pills that sells in South Korea. Vitamin B, vitamin C, vitamin D. One of the biggest selling pill selling vitamin pill selling products in South Korea and Asian markets. Kimball Electronics, again, selling parts to electric car companies. One of the biggest parts selling company to electric car companies. That's why I'm so bullish on it. In the short term, it's not getting any love. In the long term, it will be a 10x, 11x player. Very small market cap of only 529 million. Total addressable market of over $2 trillion. So a lot of room to grow, a lot of things market to capture, a lot of places to go. That's why I'm so bullish on it. So not specifically a huge moat, but as the industry grows, this player is going to grow as well. Alibaba, again, one of the biggest e-commerce players in Asia, one of the biggest e-commerce players in China, a huge moat around it. Capital One Financial, one of the fastest growing banks, spearheading the banking technology sector. Tech banking, which is like online banking and all that, spearheading that revolution, spearheading the Capital One credit card products. So a huge moat around it with that. Also, I know the product, I know the company, I know the CEO, I know the company inside out. I met the CEO multiple times. So it's a really nice company, really nice bank. JP Morgan Chase, again, it's like a savings account, very nice bank, very lot of cash on their balance sheet. I know the company, I know the CEO. I've never met the CEO, but I know him really well. People talk well about him in the bank's branches as well. So I know the company really well. So that's why I'm holding it. A huge moat around it. Followed by Insperity. Insperity again, a wonderful CEO, a wonderful CEO that came from nothing. Wonderful CEO that came from nothing, that built the company up from scratch, started in Texas, build the company up from scratch. They have a huge market space to capture if they spread out internationally. Right now, currently, it's still based in the United States, and they're doing really well. Expected to grow by 5-6% every year. Not bad, but you know, it's a really great company. Paid a premium for it because of the great management team, great CEO, great company, very solid balance sheet. Trinet Group, same thing. Competitor of Insperity, but more spread out on in the technological world. Insperity is still kind of in the physical sort of things, physical customers, physical HR handling issues. Trinet is more online. Things go more online when it comes to Trinet, payroll management and HR and all that. So Trinet is also one of the competitors, but in a different kind of segment. So I own a huge part of this market, a huge part of this segment, this sector with both these companies. And that's the reason I hold both of them in my portfolio. PayPal, again, very bullish. A lot of parts of PayPal that can grow bigger than PayPal one day. Okay, like Honey, like PayPal crypto, like PayPal, wallet, and all these things, that they're coming out with. So really bullish on it in the long term. I think it will be one of the major players in the fintech sector. And right now, it's at a huge moat with its over 400 million customers. It is a huge moat with its very easy to navigate platform. A customers, it's like a web. It attracts the customers, and they can never leave because there are so many things that they are offered. It's like one stop banking, one stop shop for everything. So these are the holdings that I hold in my portfolio right now. Portfolio is up by almost 20%, as I said, over the past 1 year and 1 month. Again, this is just 1 year and 1 month. When I'm thinking maybe 5 years, maybe 6 years, maybe 4 years. That's the time frame that I'm judging my performance by. 5 years, 6 years, 7 years. Now, again, if people are short-term investors, 1 year, 2 year investing, okay, it's whatever rows your boat. My boat is 5 years, 6 years timeline. And that is why I'm not worried about the short-term fluctuation, the short-term news that come out in the media that the stock market is crashing, the December sell-off is here, and this and that. These things, they don't really worry me because when I'm looking in the long term. I'm looking 5 years ahead, 6 years ahead. Okay, where is this company going to be? Where is this market going to be? Where is the economy is going to be? Where are the countries going to be in 5, 6 years from now? And when I see, okay, this is where it's headed, these are the writings on the wall. Things can change, nobody can predict the future, but we have to make our best guess, and we have to invest in that way, thinking long term. So we are building long term wealth. So that's how it goes, thinking 5 years, 6 years, 10 years ahead. And that is why I'm not worried about the short term news, and that is the message I want to bring home with this video. Good business, good management, strong people, you're going to win no matter what happens. So it was a portfolio update video. Thank you for watching. This is the Frugal Investor. Please don't forget to like and subscribe. This is the Frugal Investor signing out.